Hi, this is Amir with the weekend edition of the Bulletin Board Heroes. It is Sunday, the 10th of September, and we're enjoying the global warming. Starting off with the FTSE 100, where we managed to close right above the 50-day moving average, the blue line there, only just obviously. Looks like we're in a rising trend channel heading for the basically the top of that February descending trend channel. The line there around 76.50, just above, or just almost exactly where the 200-day moving average is. So we want to see 76.50 plus to get a breakout, an unlikely breakout for this time of the year. And obviously then that would be towards 78, 7900, etc., etc. Upside value, while there's no end of day close back below 7400, it was suspected that that area would provide support for this market as it did that back in early July. And hopefully we'll stay above that and over the next week or two head towards the February resistance line, 76.50. On to the DAX, where fundamentals are not that great at the moment, but still managing to just about hold on to the floor of that rising trend channel from back in December. We've got the 200-day line there at 15,400. If that breaks, want to see an end-of-day close above the 50-day moving average, 15,900, and really 16,000 plus to get the recent consolidation between 15,500 and 16,000 out of the way, which has been in place since we gapped down at the beginning of August above the 16,000 level, looking for 16,500. And that would be, I suppose, by the end of next month if it were to happen. Moving on to the Dow, and similar type of situation in terms of the setup. We've got an uptrend line there from back in October last year, 34,300, the line there. Still trying to get back above the 50-day line, 34,700. And that would then hopefully lead to 35,500, which was again the early August resistance for this market. Downside hopefully limited to former June-July support there around 33,700 and the 200-day moving average. RSI on the wrong side of neutral 50, so really want to see that back above 50 and also the market back above its 50-day moving average. On to Bitcoin, which has been as dull as dishwater since the peak back in July. Literally the price action died a death. Still on that line there from January, so I suppose there is some good news there. Bit of bullish divergence with the lower lows for September, but RSI a bit higher, so that is encouraging, but really want to see above 26,500 to break the recent consolidation and then head back towards the 200-day line, 27,500. But at the moment, that seems still a long way away. Worst case is that we break 25,300 recent support and head towards a March support line projection at 23,200. And that would be hopefully the low for the current move. Moving on to the stocks, and starting off with Acuity, the old drums, which was well loved because of its wacky name. But here we've got the situation where we're between the 50 and 200-day lines. 200-day line 7.5 and the 50-day line around 7 pence. Want to see a break through the 200-day moving average to give us a fresh move towards the top of the rising trend channel from February up to 10.5 pence. Support, hopefully at worst, would be no lower than 6.5 pence, but at the moment staying above RSI 50, so quite encouraged there. And obviously the rally here started with an bear trap island reversal, so gap down and then gapped up back in May, and we're still holding above the top of that gap, which is also encouraging, that gap around the 5.25 pence level. Moving on to a stock which is looking very encouraging indeed, which is Aferian. Here we've managed to nearly hit our initial target there around, let's call it 19 pence, above 19 pence, looking for 28 pence by the end of next month, which is the upper parallel of that rising trend channel from back in June. Upside value while we hold above the 50-day line, currently rising at 13, but don't expect the market to go anywhere near that over the near term, probably no lower than 15 if we do retrace. On to Avacta, one of the more followed stocks around, and a bit of a rocket science situation on the fundamentals, but on the technicals, we have broken a falling wedge there from back in March. Obviously, we've had many failed attempts over the recent past, April, June, even last month there was an attempt to rally through £1.10, but this one looks a little bit better than previous ones. We've got bullish divergence going into it, and we've also got a 50-day moving average break. Looks as though we could head to the top of that rising trend channel from back in May. So that resistance line heading towards £1.33 and looking for that by the end of next month or even sooner. And want to stay above the 105 area in the meantime. Another great performer over the summer, which has been Beacon Energy. Here it looks as though the shares, well, they're very, very steady even after all the gains that we've had. V-shaped bull flag breakouts above 0.24, and above 0.24 we're looking for as high as 0.35, which if we look back and we can get it on the chart is a resistance line from back in the early part of last year. So that's the top of the broadening triangle from the spring of last year. So 0.35 while we're above 0.24. So quite a simple message there. The other point to note is that both the 50 and 200-day lines are rising, so we should be in the run-up to a golden cross, and that tends to be the strongest part of the cycle. So great performance there. All started with a bear trap gap reversal back in August. Moving on to a company which I interviewed during the week after a long absence, and here the excitement is not only the direct buying and the soon-to-be launched new service, but also an end-of-week gap close buy signal. So we closed above the top of that gap down that we had earlier in the month, around 9.5 pence. Above 9.5 pence, looking for 15 pence as soon as the end of next month, and ideally stay above the 50-day line, currently around 8 3/4. So that's a reasonable setup there within a rising trend channel base from the end of January. If you are cautious, maybe wait for an end of day close above the 200-day line, but that gap close really should seal the deal for most. On to Cornerstone, which has had a long turnaround over the past year. Looks like things are starting to hot up here. We've got a rising trend channel and the top of that channel at 13.3 pence, but I think we can do better than that. Broadening triangle there from April, and that's heading towards 16 pence, and we're looking for that by the end of next month, especially while we remain above the 50-day moving average area at 10.25 pence. On to Corcel, and here, what a chart move that we had at the end of the week. I was looking for 0.48, and we managed to peak at 0.46.5 on Friday, so hopefully we'll get there early this week. Upside value while we're above the former resistance there around 0.38. So above 0.38, looking for 0.48 on Corcel, and possibly much more after any consolidation that is required. On to Empyrean, which is obviously, well, was obviously not one of the greatest situations around, but after the decline back in April last year, which was obviously rather painful. Current situation, though, is like, it looks like the base building is continuing, and we've had unfilled gap to the upside at the start of the month, rising 50-day moving average as well at 0.83. Above that, looking for 1.1 pence by the end of next month. Looks rather unlikely, but that is the setup that we have at the moment. A stock which is also looking encouraging, Future Metals, and here, nice V-shaped bull flag, consolidation above the rising 50-day moving average, so above that, the top of the flag there, the initial flag at the top at 2.6 pence. We were looking for 3 pence initially, and then up to 4.5 pence by the end of next month as a best case scenario target, while we hold above the 2.6 pence level. So a nice risk reward set up there for some. Golden Metal Resources, another company I interviewed during the week, and like that setup that you can see there with the candles, I call that candle sandwich, with a bullish candle, then retracing part of that move and then closing at the high. So really just we're looking for the shares to give us a break of 10 pence. If they can do that, then it's up to the top of that rising trend channel from the time the company listed at 13 pence, and hopefully we'll see that maybe as soon as the end of this month. Don't really expect to see the shares lower than 8.5 pence now, which is the floor of that channel from the early part of the summer. Hemogenyx, where it looks as though one or two people guessed there was going to be good patent news. Shares soaring on Friday and closing above their rising 200-day moving average. That's normally a good sign. Neckline resistance broken at 1 3/4 pence, so above 1 3/4, looking for 2.6 pence. Hopefully as soon as the end of this month, after breaking that wedge around 1.6 pence. Let's see if this time the shares can go up and stay up, because they have a nasty habit of reversing after 2 or 3 days, as you can see on recent spikes. On to Hummingbird, which had a good end to the week, and here we bounced actually above the 200-day moving average around 10 3/4 pence, waiting for a break of 13.3 pence to take us up to a new leg, hopefully by the end of next month, maybe as high as 23 or 24 pence, which would obviously take out the May resistance, but obviously the fundamentals now looking rather or even better than they were then. Don't want to see any price action on the wrong side of 11 pence now on Hummingbird. Something which is a bit of a lap of honour, a rather weird one, I suppose. Here we've got Regtech, and the reason for the celebrations are that we were looking for a measured move. The initial measured move target of £2.60. Initial move here was £1 to £1.90. Then the next rally was expected to be from £1.70 to £2.60, i.e. another 90 pence rally, and obviously we've exceeded that. Current position is that we want to see the shares remain above that peak there, £2.26 on an end-of-day close basis, to then give us a fresh target as high as £2.80. Only back below the floor of the channel there from last month at £2.10, really turning this situation negative. On to Tertiary Minerals, which had a decent reaction to yet another interview that I did quite recently. Here we're looking for a break, a solid break at an end-of-day close above the 200-day moving average at 0.13. If we can get that over the next week or so, then we're looking for up to 0.22. Rally starting with a bear trap gap reversal and the bullish divergence, so hopefully this will have further legs over the near term. On to Tekcapital, which is of note at the moment because it has one of our more favoured setups. We initially had a bear trap gap reversal, but that was filled, but we had another unfilled gap to the upside, and the view now is at above 11.25 pence, looking for 14 pence over the next week or two. Finishing off with Upland, which was one of the stars of the summer, and it looks as though it's ready to remobilize itself now. The peak, I think, previously around 2.8 pence. We rallied, we retreated down to 1 3/4, above 1 3/4 now, looking for a retest of that 2.8 pence area. If you are cautious, then you would wait for an end-of-day close through 2.2 pence, which is a line of resistance from last month. And if you're an optimist, you'd be looking for the top of the rising trend channel from May, as high as 4 pence by the end of next month. But the key here is hopefully holding above 1 3/4 pence. That's it for me today. More updates during the week.